Mohamed, we'd love your early reaction to this. And just tell us, is this noise? Is this weakness we can look through?
So my three takeaways, and the first one speaks to, is it noise, is it signal? Three elements on noise, we should look through them: payrolls, labor force participation, and earnings. The fourth one, unemployment, I agree with Jeff, that has more information content. Two is, if you want to make more of this data, then go beyond the big four headline numbers and go into the details. And you need to do that if you're going to derive any economic and policy implications from this report. And then finally, the reaction of the bond market has to do with two things. One, as Mike noted, the whisper number was even higher than the consensus 100,000. And as you noted earlier, the balance of risk was on the upside for the market. So what you're seeing is a repositioning that people were hedging a little bit, because the one thing that would have really moved things is a much stronger number, not a much weaker number. And that's something that you noted earlier today, John.
Mohamed, I'm struck by the fact that we've gotten so many revisions and so many unclear numbers that we can't fully rely on. How much are you really taking more signals still from what corporate executives say and from the Beige Book and some of that commentary than some of the numbers that we've been getting out that show and really have led this expectation in markets that there should have been an upside surprise?
So, Lisa, this is a time when you've got to take a very holistic view and also have a pinch of salt added to all that, because we have some major events coming up. Look, on the whole, I think the data are consistent with an economy that's still robust, an inflation rate that is proving somewhat more sticky than you would like, and a major call for the Fed to exit this notion of fine-tuning and go into a world where it has a steady steer on interest rates. It should be cutting by 25 basis points for the next few meetings, and then revisiting after that. It should not be looking to react like it had in July by not cutting, like it did last time by cutting 50 to every basis point. It should just be steady, because this data is going to be noisy, and that's what happens at inflection points.